What's going on, everybody? It's Jeff here. Welcome back to the channel. So a lot of people have been reaching out to me asking me if the bull market is over, okay, and if the stock market is going to crash. So I wanted to jump on here, guys, to make a video for you just to explain that what we are going through in the market is very, very natural. The bull market still has a lot of fire and fuel left in it, okay? We're going to go through a little bit of the historicals, and then I'm also going to give you guys some ideas on where you should be investing your money and exactly what is poised to rise over the rest of 2021 and 2022. So guys, stick around. You're not going to want to miss this. For those of you that are new to the channel, all I ask is that you hit that like button and subscribe to join the family. If you're interested in joining our private community, it is the first link in the description. We have over 300 members over there. I have my personal portfolio. I go over all different stock picks that I'm looking at, as well as a stock analysis for anybody who is interested in certain stocks that I can go over for you. So if you're interested, guys, first link in the description. We'd love to have you guys. Let's get into it. First and foremost, guys, I wanted to just point out and bring up a little bit of historical data, because that is all we have to go off of when it comes to the stock market. The average bull market lasts almost 973 days, or 2.7 years, and the longest bull market lasted from 2009 to 2020. It ended obviously because of what COVID happened, and we saw the market pull back about 30%. The average bear market lasts about 10 months, okay? So it is much, much shorter from a bull market to a bear market. However, that bear market was insanely short. We rebounded very, very quickly. And I know a lot of you guys were new to the stock market and new to investing, whether your friends, your family, your coworkers were talking about all the gains that they were seeing, especially in those high growth stocks such as the EV sector, the tech sector, and so forth. And last year you got into it, whether it was the beginning of last year, you saw a lot of those good gains, or it was the end of last year or just the beginning of this year. And while we saw a little bit of gains happen at the beginning, as of February 11th, the NASDAQ pulled back. It hit that correction territory of 10%, and a lot of us saw our portfolios become bloody, bloody red. But I want to tell you guys that this is very, very normal. We normally don't see a correction happen in the first year of a bull market. However, we always see them happen, or normally I should say, see them happen in the second and third year of the bull market. So it is very, very normal. But one thing I want to point out to you guys that is very, very important is that it was the NASDAQ, the tech sector, that pulled back that 10% dip to hit the correction mark. The Dow Jones has continued to maintain and reach all-time highs because investors are not pulling their money out of the market. They are shifting it. Okay, now it's not only the COVID stocks that are beaten down and the retail stocks that are beaten down that why investors are shifting their money over to it, but it is also just naturally what happens at this time of the year. The economies naturally begin to boom up a little bit as you have areas like I am in Connecticut, where people stay dormant a little bit longer in the wintertime, okay, and they decide to go out a little bit more, meaning online shopping is going to slow down a little bit and the retail side is going to pick up more and more. And that is naturally, even though, forget what happened with COVID, because this has been going on for years and years and years. And now, especially because of COVID, we are going to see that even more. Where I am in Connecticut, we are a little bit stricter of a lockdown. However, these restaurants are beginning to roar lately because people are getting restless. The vaccines are rolling out and they want to eventually get outside. So the point behind this is, even though some of your tech stocks are down, and if your portfolio is down 40%, then you have invested way too much into too few stocks in very, very narrow industries. But it's time to be able to kind of shift your money over to where the market is going to be moving. So naturally, I want to say this as well, is that I talked about the first year of the bull market is the biggest year. It's the biggest rally. It goes up an average of 45 to 50%. The biggest one was almost 70% in 2009. And the second year is about 16% of a gain. And that's because it is much, much choppier, okay? But there's an article that was put out on CNBC that talks about the Easter rally. It's the retail rally. It happens every year in that April timeframe after Easter, that the markets get, or the retail side, the retail sector gets a little bit of a rally happening out of it. This is expected to continue because they were beaten down because of COVID, and naturally all those stocks are currently at a value price. I talked about one I pointed out to the group a little while ago of Carnival Cruise Line. A lot of their ships, if not all their ships, I know they were expected to start at the end of March. However, their ships are still at dock, and if you look at this, it is sitting at $25.70 right now. And if you look at the 5-year chart, the lowest it was $41.50. which means, guys, we have a 60% room to run. And now, even before these ships begin to start running and they, begin to get some revenue coming back to them, this stock is going to rally once the economy can fully open. You have, the Biden administration and Joe Biden, who spoke yesterday, said, I believe it was going to be 200 million doses. Everybody's going to be available for it very, very shortly. The vaccine is rolling, and naturally restrictions are being lifted. Once it can fully wide open, people are going to have more money in their savings accounts than they've ever had. They're going to want to go on vacation. They're going to want to get out. Okay, yes, there still will be people that are cautious. That's understandable. But the way the economy is set to run, which is why investors are afraid of inflation, they're going to want to get out. And this is a perfect stock that is going to rally, okay? But also, just to talk about the rest of the year, guys, is that the Fed is going to see a stronger economy. GDP is expected to be very, very high this year because of that initial economic outboom. So not only your Carnival Cruise Line stocks, your airline stocks, okay, but your restaurant stocks, your Walmart, your retail, I'm sorry, okay, as all of your entertainment and gaming stocks are still going to be able to take that boom. They've been beaten down. So just because your tech stocks have been hit a little bit, okay, it's be able to shift your money. The point behind this is that if you are new to investing, I hope you don't get deterred because you got into it and it immediately just didn't double your money very quickly, and that you learn that a well-diversified portfolio is crucial for long-lasting wealth building and long-lasting growth, and so that your risk and your pullbacks are not insanely high. But what's important for the rest of 2021 is that the Fed still expects to see no rate hikes. This is going to continue for the rest of this year and going into 2022. Rates are at near zero. Once they get the economy rolling back a little bit higher, okay, then yes, you can expect to see those rates start to rise. And we will go over that and we will talk about that. And that is when the shift will begin to happen, where investors start to take their money out of the market, okay? But if you look at exactly what's going on, I bring this up, okay, the S&P is still roaring. If you look at where the NASDAQ began to pull back, the S&P barely had a blip, and the same thing with the Dow Jones. These sectors will have their corrections, and have we seen before where the Dow Jones is down, 200 points, and the NASDAQ is rallying, eventually the shift will happen back where the tech stocks are the favorite, and they will continue to rise. Okay, if I'm looking at where Apple is sitting at that $120 price point, I continue to add it to my position because I can see exactly where it's going to go for the end of the year. So you're just looking at it, you're caught in a wrong timing of when you got into the market and seeing those tech stocks pull back. However, eventually the time will happen where the Dow and the S&P begins to pull back. The tech is the favorite again, and it begins to rally. But like I said, and I'll say it again, the most important thing is that you continue to have a well-diversified portfolio and you don't go too heavy on one single stock. So guys, that is it for this video. The market will continue to rally for the rest of 2021 and the beginning of 2022. I will continue to monitor exactly what the Fed is saying about the rates, because that is when eventually we'll see investors start to pull their money out of the market and shift it into other wealth building vehicles outside of the market, guys. So I hope this gives you a little bit of insight and just gives you some conviction that, this is normal. It's set to a pullback. Couple things I want to really point out is, one, when it comes to buying the dip, okay, if the stock goes down a little bit, don't keep buying every dollar going down, because a couple things are going to happen. One, you're not really lowering your dollar cost average, your entry price, your unit cost towards it. And two, you're probably getting way too heavy in that stock. The next thing is, guys, is don't panic sell, all right? I try to, have fully belief on what my stocks and where I believe they're going to be going in the long term. And because they pull back at 20%, I never try to sell at that point if I believe in them long term. If you got into these high flying stocks, okay, some of the marijuana sector stocks and some other ones, okay, be cautious about getting into them. Be cautious of the penny stocks right now, because penny stocks are great when the bull market is absolutely roaring. However, when the market goes sideways and choppy, those big investors, they choose to get away from it and go into the value stocks, guys. So I hope that gives you some conviction, guys. That's it for this one. I'll see you in the next one.